Okay, hi guys, this is Simon with toughtrader.com doing the trade review for Monday the 13th of November. So the idea behind the trade review today is to both show how what we had planned to do versus what actually happened, and then learn from the price action of what actually occurred, and to get that done in a brief period, in this case 10 to 15 minutes today. So coming in on the day, we had spoke about two things. When we look at the overnight session, we talked about, let me pull this over. There we go. This is from the other computer screen, and this is from the overnight, and that is in NASDAQ, and that is ES. And so one of the things that I had talked about was, if you squinch this in just to drop. Again, I'm not used to this. This goes a lot faster than I thought it would, so we will get this all together. Okay, there we go. So when we came in from the overnight, and there's ES. Let's squinch this down just to drop. Nope. There we go. So when we came in from the overnight, right, this is what the profile looked like in the overnight session. And you can see where we both, this is where we closed on NQ. This is where we closed on ES. And this was my thought. We spent a lot of time up here at the upper 6,300 to 6,320. Let's call it overnight. In ES, we spent a lot of time up here at 2,580. We then extended down. I later figured out what the news was. A lot of times I can't put the pieces together. But GE cut their dividend in half. I didn't know that. GE cut their dividend in half. The Broadcom and Qualcomm deal, basically Qualcomm pushed back and rejected the Broadcom deal. And long story short, we ended up with a gap down overnight, right? So the first thing that I thought was, as extended as we were, when you look from the prior day's setting, so this is, so going back a little bit further, right? Let's switch over to the other chart here real quick. When we look at ES coming in on the day, this is Friday, right? This is today. This is Friday. This is Thursday. So in order to be bearish, I wrote this in the notes, right? That Thursday and Friday were going to be the major, if you look in the notes from the overnight that I posted on Saturday, the major important areas were above Friday's high. Let's erase all these lines. Above Friday's high on ES and below Friday's low. That if we didn't get to those 2 points, right, we were essentially dealing with an inside day. So what did we do? We gapped down just underneath Thursday's low. That was the unimportant low, right? And well above well above Thursday's low. And we immediately pushed back in. The thought being there was too many shorts out of the open. And what was I looking for? Now, if I come back and plug those pieces together, right, and I look for it in reverse, I was looking for a push back to the white zone. That part of the trade was perfect on both ES and NQ. If we look at the same thing, so that was a look at ES, right? Pre-market to after we opened and what the market did. We pushed back to the white zone. That was totally expected. If we look on NQ, this is correct. If we look on NQ, you can see again, this was Thursday's low. We gapped down, right? We closed at 63.09. We opened up down here at 62.85. But and now that I look at it, there's one piece that I missed. There's one piece that I missed off of NQ that I should have captured very quickly. Even though we had a good low here to the left and we pressed into the single prints, the white zone, actually I guess I didn't miss it. We just didn't get it, did we? The white zone, there was no white zone, but there was a support area. So I'm just recreating the open at this point, right? There was a green zone and I had a yellow zone below. And what I was hoping for, this yellow zone represented this poorly auctioned area just below here in the 62. The back of this area was towards that 62.7950. And I was trying to fill in the back of this poorly auctioned area, right? So both in NQ and ES, that presents a challenge off the open, right? The idea was that we were going to push straight up, But if you look at both of these charts, and the reason why I mentioned this is I feel the day was lost in terms of being able to garner a big day. I feel the day was lost because without the pushback, right? It's very difficult for me to go off the open. Let me remove this real quick. It's very difficult for me psychologically off the open to just go, hey, I'm just taking the long out of the gate, especially when my white zone's right below and I'm waiting for a push down into this 2571. This is also Globex low. From a trading perspective, even though I had the piece where we were going to push up correct, I needed the piece where they pushed back against this major area. And again, you'll see on NQ, they did the same thing. I need a point where they push back against these major areas. This was Globex low, that's 62.81. I need at least a shot for it to pull back against those two locations to trade. Let's pause there for a second because that's really important to my trading. You have to make a decision as a trader, right? And this is where I find traders get really jumpy. And it's funny, I really try to rush through this, and this is a really important part of trading consistently and trading well. I find when traders, if you're trying to trade from a key location, right? And I went through when I go through the trade reviews and we look and we go, okay, right? So this is normally how I do a trade review. White zone, right? I point this out. I point out white zone to the tick, an immediate rejection down, right? 25.76 down to 25.75. So I didn't short the front of the white zone. I shorted the back of the white zone. Why? Because I was on pause before it got there. But technically, if I follow my rules to the tick, right? Anyone who had left a limit order at 25.76 when I posted this chart, if my memory serves, 276 contracts went off at 25.7650. That trader at 25.7650 was able to garner 2 points out of this white zone, right? The trick behind this is, okay, I had the right read, push up in the morning. I had the right locations. Now the question becomes is, do I want to be a trader that trades at location and I want the market to come to me, or do I want to be a trader that I'm in a frantic mode and I'm constantly trying to read the price action to gain an edge, right? Today, if you're one of those traders that frantically reads the price action, you saw the first up bar and you somehow magically guessed that President Trump was going to say something after the open, which he did. This causes this huge drive up, right? If you magically knew that, then you could jump, and you jumped in on this first bar and you survived the rotation back, which was actually fairly significant. This 25.95 all the way back down to 25.86, which is enough to stop out most retail traders. Then you did okay today, right? But the question is, you're frantically walking around looking at the price action instead of coming back over and going, okay, here's the market structure. Here's the market structure that I need, because this is what the zones are based off of. That and 20 years experience in trading, right? This is what the zones are based off of, right? The traders that I find succeed long-term base their decisions based on structure versus basing their decisions on simply what the immediate up and down of the price is at the second the market opens. That's what I'm trying to communicate. So if you look from how we opened today, we immediately pushed into prior day's range. What does that tell us on NQ? First thing it tells us is normally we're likely to have choppy conditions when we chop into a range like this. I believe the only reason we drove through the range this morning, as we did on NQ and as we did on ES, right? So you'll see in both cases, we drove all the way through the value area. Forget I'm on a second computer here. You'll see we drove all the way through today, all the way through this value area. From the open, it was an open drive higher. So this was what I would consider an exceptional piece of price action relative to what the chart told us we would have. Because when we are inside prior day's range and we have a wide range like we have both in ES and in NQ, right? If I pull this down here, let me adjust this. If we look at the prior session, right, we opened up underneath. So think about this being as consistent, because it is, right? I constantly mention this when I'm doing the trade reviews and when I'm coaching. We had a wide area where there was structure, there was volume, and there was time. normally when you get to an area like that, you have a day similar to Friday where it's balanced, choppy, and slow, right? So two reasons why that's important, right? You have to know that this was exceptional, that trading any setup, including the white zone, is an odds-based approach, right? And that the other thing that I reminded, if you go back and look at the preview, was in the first 30 minutes is the most dangerous time of day. Why? Because even though we expect a certain type of response, meaning I expect it to be mechanical, that's the time of day where you have the most volume going through. You throw in President Trump's statement from the morning, and what you end up with is normally a day where that type of price action would look like a gap up and a open drive higher. Now, connect those pieces, right? Follow through. We know that we are stuck. We know that we are stuck in prior days range here, that it should be slow and grindy. We do get the rejection off the white zone and NQ, very tiny, right? Then they attempt the rejection from the back. The front of the zone gives a small, tiny rejection. Back of the zone gave a small, tiny rejection. But it wasn't the rejection I was looking for. I was basically looking to test up into the white zone and reject out of here. I was looking to test up into the white zone and reject out of here. Small rejection from the front, pretty much no rejection from the back. It went flat and then busted out, right? Again, this was being driven by news, right? So in the room, I shorted the back of the white zone. I shorted NQ as well, both on reduced size trades, because I said it was very possible, due to the way that we opened up, which was open drive higher, and it conflicted with what the profile was telling me overnight, right? I was reducing my trade size till we got outside the first half hour. I ended up with small stops, right? Now let's look to the top side. A lot of people were expecting the market to continue to run, and I was too, quite frankly, right? 62.20 up into the yellow zone, right? Again, this is Globex high, pre-planned trade. What happened? Why did we slow down and grind sideways like this, where it just became a chop machine? Anyone who tried to actively trade through this level really got torn up in here, right? And we ended up with getting some signals that we normally would use for longs that actually work quite nicely. Like you'll see in here, right? You got that negative 600 tick print. I'm always talking about if we get a negative 600, a lot of times it'll mark a low, and it did mark a low, right? The problem with this 600 tick print here was it was on a 2-point rotation, maybe, and you're adjusting coming out of a 20-point rotation. So the what I'm trying to answer is the what, so what, and now what of the whole situation. So the what is, I shorted the white zones in the morning, number one, up in this location. I was looking for longs initially. Let me get rid of this chart because I'm not going to cover the Russell here, and we'll have more room to work. My plan was initially to look for a long on a push down, right? Assuming that there was too many shorts, I wanted to see if we could trap and push to the upside. The market did not give me that opportunity. That goes down in my book as I was ready to get long out of the white zone. It simply did not give it to me. Trade lost. The so what number two, the white zone came up almost immediately. We drove right up into it, right? I failed to get filled at 25.7650. I moved to the back here at 25.7750, and I shorted somewhere in here. I was briefly up on this trade, not for very long. Both trades on reduced size. Both trades got stopped out. In my book, why that is important is because I lost relatively little amount of money. I was on a small trade size, right? And I ended up not fighting what ended up being an open drive higher. That is important because my read told me, which is right the majority of the time, that we should have run in to, at a minimum, this type of price action way back over here. What changed that story? News came out. President Trump talked about dropping the individual mandate on health insurance so that people could get more of a discount on their, or reduce their taxes or drop the tax rate even lower. And that's what caused this spike. Basically, anytime there's a set of algos, I'm absolutely convinced, anytime they talk about taxes and a certain phrase of words, you just get a huge buy program, right? So how did the market behave? So the stop was no big deal. So now I have a next choice to make going through that process. Do I fight the market or do I just surrender? So This area was marked off as single prints as a potential area of exhaustion, but it's a purple zone, which means it's not a high odds zone. I did not take a trade here, but what were the characteristics that we had that made it a candidate for a trade that I mentioned in the pre-market? Rotation from 62.86 to 63.16. Again, approximately 30 points. You see the counter rotation. I'm not a fan of shorting moves up like that. I don't care what the chart says. I'm not a fan of shorting this, right? Same thing here, 25.73, let's call it, to 25.81. Eventually, we got 10 points out of that. And you see that's where the exhaustion came in, where we started trading sideways, right? You can see in this 8 to 10 up, the market got tired, but it didn't spin off, right? So here's the last piece as we're going through the day. I mentioned it was not worth trading this, that this was very, very choppy, right? I would not get involved. The only thing I did point out is a short, as a potential short, where we were looking at the price action. And again, this is aimed towards the viewers in the room. I said, normally, if I had location up here, what I would have been looking for, I'm pretty sure it's still marked. Let's see if it's still in there. Let's go to a 5-minute chart. And I need to pull up my other computer screen. And I do not have it on this chart. I thought I did, but I do not. Let's look quick. Again, here I'll show it. I can reproduce it. When we pushed up this morning, on this bar right here, I pointed out, if you draw your profile up on that bar, all the volume came in at the high, and I pointed out that 63.1950. If I had anything in this area that I could have leaned against, I would have been very, very short against that 63.1950 on the way back up. I didn't think we were going to roll over from here, so there was nothing for me to do in this area. So lastly, let's play out this exhaustion and how that played out, right? Because there's a lot of ways I could cover this. I think this is the most important way to cover it. When you get sideways trading like this, where we move all sideways all the way through this period, this is what it looks like. This is what it looks like on the TPO. So I'm going to pull that up. Okay. See when we get wider and wider and wider and wider and wider and wider all the way through here, right? So if I stretch this out, you can see the point of control is all through one area. It's that little blue line, faint blue line that's moving through here, okay? When we get a faint blue line that moves through this, it is very hard, okay, I want to say this again, it is very hard for the market to pull away from those areas, right? So what you'll see is we have 1, 2, 3, 4, 5, 6, 7, 8, 9 periods, right, where we have the point of control all in one location, right? And then we finally pull away in this last period, right? And what's happened here is, remember, the prior day, in order to get to that point, two things have occurred here. In order to get to this point, we had to push, you had to picture two armies, right? There was an army that won the day over here on Thursday. There was an army over here that won the day on Thursday, right? Where they were fighting over this territory. Once we got underneath all these guys, right? Because we started off the day over here. Once we pushed all the way through these guys, right? Imagine if you were feeding an army, you would go, wow, these guys are going to be really tired. And they were, right? They weren't exhausted to the point where they had to pull back for energy, but they had to pause, right? And then you get all this sideways trading. Well, let me tell you, on trend day up, you do not want all this sideways trading. This is actually a bad sign. If you're thinking trend day up, what you want is 1, 2, maybe 3 periods of rest and then continuation higher. When you end up with all this position sideways, I pointed this out if you look in the preview, or somewhere through the day, I know I pointed this out when we were going sideways like this. If we push up out of here, this move up will often be the exhaustion to the upside. If you look on the chart, so if you look at this chart, here's the sideways trading. Imagine all the effort it took to push through here. Market's tired, right? We come back from lunch. The way that translates, which is the important part, is in a push up into the final target, which was at least for this day was the yellow zone, was the first push in, right? As soon as we get in here, we spend a couple minutes, we're completely out of buyers, and we completely roll over and push all the way back. And if you look where we came back in, going back to the chart, we came all the way back down to the bottom of value. We swept this area, and the reason why we swept this area, even though the point of control is in the exact same place, right? We swept this area because there was no reason to negotiate price over here again. And then notice, this is where the magnet is. We pulled right back to that 63. We pushed down through that point of control. We come right back to backside test that 63.1650, and then we roll right off. And ES did something very similar in that particular vein. So again, we pushed right into the yellow zone and rejected out. So to summarize for the day, the people getting caught short overnight was the correct read. I had no opportunity to get long because we never pulled back from the open to find long location. I shorted in reduced size at the white zone because we were in the first 30 minutes. And I didn't want to destroy my day in that point. That trade was wrong. It got stopped. That's part of trading and normal. I did not do anything else on the balance of the day because I could not get up to location. And then lastly, my trade rules do not allow me to short the last hour of the day. Several members in the room did short the yellow zone. These are for this year, 2017. The yellow zones have an 83% win rate. Several members did short the yellow zone. I did not. I don't short the last hour. I don't like the stress involved in it. And sure enough, we pulled back to the point of control, long liquidated past it, backside tested it, and I have no idea what happens after the market. But that's the review for the day, guys. I hope that helped. If you have good preparation coming into the day, you can make a lot of money. The most important thing is don't overtrade. Trade your key locations that you've planned out beforehand. Manage your risk. And this is not a day-by-day deal. This is a marathon. This is a month-over-month, year-over-year deal. We will get our locations through the month, and I will get paid. I'm highly confident of that. Just didn't happen today. That's all. Would have if I could have gotten any push down. Any questions? I know that was very long. I'll get better at setting up the trade reviews off the Google, off the YouTube videos, but they'll be ready immediately, which is nice. So thanks everyone for joining me. Before I forget, past performance is not indicative of future results. Let me throw this up. There we go. Past performance is not indicative of future results. This is for educational purposes only. And remember, you can lose a lot of money trading futures. Make sure you're adhering to a risk plan. This is my trade plan. Follow it at your own risk, right? I'm just sharing it in hopes it'll make you a better trader. Have a good night, everybody. I'll talk to y'all tomorrow.